You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, May 8th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Wednesday. The first thing to know is China trade data shows exports are weakening. China's exports unexpectedly shrank in April, but imports surprised with their first increase in 5 months, painting a mixed picture of the Chinese economy as Washington attempts to increase pressure on Beijing ahead of high-level negotiations starting Thursday with threats of more tariffs. The data contained little to soothe concerns over a global slowdown, which economists fear will get worse if trade talks between the U.S. and China break down. President Donald Trump has ordered tariffs on Chinese imports to increase from Friday. While Trump has insisted that China will bear the majority of the costs in the tariff increase, economists are skeptical. Although Eric Norland, a senior economist at CME Group, believes the new tariffs could shave up to 1% off the Chinese economic growth, he warns that U.S. corporate profits could also shrink by 3%. The second thing to know today is global stocks decline ahead of trade discussions. A sharp sell-off on Wall Street a day earlier, with the Dow registering its second largest percentage drop of the year, while both the S&P 500 and NASDAQ saw their third biggest drop, tainted global stocks on Wednesday. China's Shanghai Composites and Japan's Nikkei 225 followed the decline, closing down more than 1%. European stocks were also lower, nearing midday trade as a positive boost from an unexpected increase in German industrial production ran out of steam. U.S. futures pointed to a further drop ahead of the arrival of Chinese officials in Washington for 2 days of trade negotiations on Thursday and Friday. Futures were lower pre-open. The third thing to note today is oil rebounds from a 5-week low ahead of inventories. U.S. crude rebounded from a 5-week low on Wednesday ahead of official U.S. government data on stockpiles after reports that Russia was taking longer than expected to fix quality issues with crude flowing through its largest export pipeline to Europe. According to Bloomberg tracking data, only 1 of 13 tankers had loaded at the affected Ust-Luga terminal had discharged its cargo. The slow pace of restoring Russian supply has supported higher oil prices. Geopolitical risk premiums are also rising after Iranian President Hassan Rouhani said that his country would reduce its commitments to the nuclear accord and could resume higher uranium enrichment. The U.S. Energy Information Administration will release government figures on U.S. oil stocks at 10:30 a.m. Eastern. amid expectations for a build of 1.2 million barrels of crude and a 0.4 million draw in gasoline stockpiles. The American Petroleum Institute's data yesterday indicated a 2.8 million barrel increase in crude inventories last week. The fourth thing to note today, Disney is on tap for earnings. Amid a handful of earnings due Wednesday, Walt Disney will take pride of place after the market close. On average, analysts expect that Disney earned $1.57 per share, according to forecasts compiled by Investing.com. Revenue is seen coming in around $14.5 billion. Expectations have been buoyed by the unprecedented success of Avengers Endgame, which has brought in more than $600 million at the box office alone. Disney shares are up 22% on the year, sixth among the Dow 30 stocks. And the fifth thing to note today is shares in Lyft fell 1.4% in pre-market trade Wednesday after the company reported its first quarterly results since becoming a public company. The ride-sharing company posted a wider-than-expected quarterly loss, although it managed to top revenue forecasts and provide second quarter sales guidance that beat consensus. It said it expects losses to peak this year. Quarterly numbers arrived amid news that Lyft was partnering with Alphabet's Waymo unit to provide self-driving cars in Phoenix. Lyft's results are a reminder of the struggle of ride-hailing companies to turn a profit, creating an awkward backdrop as rival Uber gears up for its own initial public offering. Uber is expected to price the offering on Thursday, with official trading to start on Friday. Our second story today, also from Investing.com, Huawei CFO Meng to appear in Canadian courts. Huawei Chief Financial Officer Meng Wanzhou is set to appear in a Canadian court on Wednesday to begin what is expected to be a long legal battle against the United States' request that she be extradited to face fraud charges. The largely procedural hearing is the latest development in a case that has escalated tensions between China and both the United States and Canada. Meng, 47, the daughter of Huawei Technologies billionaire founder Ren Zhengfei, was arrested at Vancouver Airport in December on a U.S. warrant and is fighting extradition on fraud charges that she misled global banks about Huawei's relationship with the company operating in Iran. At Wednesday's 10 a.m. hearing before Justice Heather Holmes on British Columbia Supreme Court, Meng's lawyers are set to discuss motions they plan to bring, according to Daniel Coles, a lawyer who acted on behalf of media companies to oppose an initial publication ban on the case. Our final story today is from Investing.com. ECB defends securities settlement system after fee hike. Financial markets need to push more trades through the European Central Bank settlement system to cut costs, an ECB official said, dismissing industry criticism that the new system was failing to deliver promised results. The ECB built a pan-European Target 2 Securities, or T2S, platform for settling securities trades to help create a cheaper European Union capital market to compete better with the United States and with Britain after it leaves the EU. Opened in June 2015, T2S has been in full operation for about 18 months, but had to raise fees earlier this year. Volumes remain too low to allow the ECB, which is still recouping its investment cost, to cut fees. Some national settlement systems that T2S was meant to replace still remain. And that, ladies and gentlemen, is news you can use for today, Wednesday, May 8th, 2019. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.